Greeting everyone. This is Ali Hassan, and this is my 13th presentation on project management. This one is on cost management. As mentioned before, every project will be successful if you can successfully manage scope, schedule, cost, and quality. These are the main parameters to monitor and control and manage, of course, in every project. And this time we're going to talk about how to manage the project cost. So this is overview of the project cost management. So project cost management includes the processes involved in planning, estimating, budgeting, financing, funding, managing, and controlling cost so that the project can be completed within the approved budget. The project cost management processes are plan cost management, estimate cost, determine budget, and control cost. So we have to plan the cost management. Then we have to estimate the cost. Then we determine the total budget of the project. And then we control how this budget is being expended on in the project. The figure on the next slide provides an overview of the project cost management processes. So these are the four processes: plan cost management, estimate cost, determine budget, and control cost. And each one of them has its own inputs, tools and techniques, and outputs. So for plan cost management, there are so many inputs we need in order to plan cost management. And there are three tools, for example, here, and techniques to use to plan the cost management. And the output is going to be the cost management plan. And so on for the others, the estimate cost, determine budget, and control cost. There are inputs, tools and techniques, and outputs. Some of these outputs are inputs to other processes, like one of outputs of one of the processes can be an input to the other process. The tools and techniques can be similar in each process, and sometimes they differ. Like expert judgment is used in all four processes. So we first talk about the plan cost management. The definition of plan cost management is the process of defining how the project cost will be estimated, budgeted, managed, monitored, and controlled. So the plan will show the roadmap, how to do the cost management. The key benefit of this process is that it provides guidance and direction on how the project cost will be managed throughout the project. And this process is performed once or at predefined points in the project. The inputs, tools, and techniques and outputs are depicted in this figure, which is taken from a PM book. So the inputs to this process is the project charter, which we talked about before, the project management plan, and we have the scheduled management plan, which is part of the project management plan, and the risk management plan, which is also part of the project management plan. The third input is the enterprise environmental factors, and the fourth one is the organizational process assets. Tools and techniques: the first one is expert judgment, the second is data analysis, and the third is meetings, and the output is the cost management plan. So now we talk about some of these inputs and tools and techniques in the output, because some of them we have talked about before actually in previous presentations. So the inputs and tools, the inputs are, as we said, project charter, which we talked about before, the project management plan sections, which are the schedule management plan and risk management plan, and so on. So the project management plan, we said we use the schedule management plan and we use the risk management plan to use as inputs. I forgot to mention that the cost management planning effort occurs early in the project planning and sets the framework actually for each of the cost management processes so that the performance of the processes will be efficient and coordinated. The cost management processes and their associated tools and techniques are documented in the cost management plan. So the second, the first, we said the project charter, which we talked about before. The second input is the project management plan sections, which are the schedule management plan and the risk management plan. And the third one is the enterprise environmental factors. And these are the organizational culture and structure which can influence the cost management. And the second one is the market conditions. Describe what products, services, and results are available in the region and also in the global market. The third one is the currency exchange rates, because some of the services and equipment and material can be procured from many countries. So we have to know the currency exchange rates. The fourth one is the published commercial information, which we can find, in literature or, online and so on, or in company, literatures. And the fifth one is the project management information system, provides alternative possibilities for managing cost. And the last one is productivity differences in different parts of the world can have a large influence on the cost of projects. Because if you do some of your services in different countries and procure from, equipment and material and service from different countries, the productivity is not the same in all countries. Say in Japan it is so much, in the UK it's so much, in Canada and in the third world, in different parts of the third world. So the productivity is different. We have to take this into account as an input to do the cost management plan, or to plan the cost management. The fourth one is the organizational process assets. So, what we use, actually we use the previous similar projects. We use lesson learned from the database of the company. We use financial databases also. We use existing policies and procedures. So these will affect all. They will be our input to the project cost management plan. The tools and techniques. Let's go to the next slide. Tools and techniques are the expert judgment. Expert judgment actually from, say, previous, these guys have some information from previous similar projects or information from industry, etc. Cost estimating and budgeting, earned value management. And the second tool is the data analysis. And the third one is the meetings. So the data analysis actually, the data analysis technique can be used for this process includes but not limited to alternative analysis. Alternative analysis can include viewing strategic funding options, such as there are so many funding options to any project, like self-funding, if you don't need any loan from different organizations and banks and so on. Funding with equity or funding with debt. It can also include consideration of ways to acquire project resources, such as making, purchasing, renting, or leasing. These will affect if you buy or rent, or if you have something internal to the company. It will affect the cost of the project. Meetings, we talked about this one before. So the output of this process, the first process, is the cost management plan. And the cost management plan has many sections. So the cost management plan can establish the following. It will establish the unit of measure. How do you measure your, do you use staff days or weeks or staff hours or cubic yards for quantity measures or lump sum in currency form, so on. The second one, the cost management plan will establish the level precision. How much do you need your precision? As it say, this costs say $1,000, or you just need 1,000.95. So this will be fixed in the cost management plan. Level of accuracy, the acceptable range. What's the acceptable range? Say plus minus 10%. Used in determining realistic cost estimate is specified. So this has to be specified in the cost management plan. The fourth thing which will be established is the organizational procedure links, like the work breakdown structure provides the framework for the cost management plan. The fifth one, fifth one is the control thresholds. Variance thresholds for monitoring cost performance may be specified to indicate an agreed upon amount of variance. You have to specify from beginning, say the variance is so much is acceptable. If it is plus this or minus this, it's not acceptable. The sixth one is the rules of performance measurements. The rules define the points in the work breakdown structure at which measurement of control accounts will be performed. And when we do the measurements of the cost, expenditure, and so on. The other thing which will be established in the cost management plan is the reporting formats. What formats do you report your cost and expenditure? And the last one, any additional details, like description of strategic funding choices, a procedure to account for fluctuations in currency exchange, and so on. The second process is, so once we establish the cost management plan, now we estimate the cost. So this process, the definition is this process is the process of developing an approximation of the cost of the resources needed to complete the project work. So, see this approximation. Nothing is exact here. It's all estimates. The key benefit of this process is that it determines the monetary resources required for the project. This process is performed periodically throughout the project as needed. So the inputs and tools and techniques and output are depicted in this figure. So as you can see, the inputs are the project management plan, which is output of the first process, which we just talked about. And we use the cost management plan, which we just did in the first process. A quality management plan, scope baseline. The second input is the project documents, like lesson learned register, project schedule, resource requirements, risk register. The third one, enterprise environmental factors. The fourth one, organizational process assets. Tools and techniques, expert judgment. The second one is analogous, parametric, bottom-up, and three-point estimating. These are the estimating tools. The third one is data analysis, alternative or reserve analysis, cost of quality. The fourth one is the project management information system. And the fifth one, decision making, the voting. The output of this process, there are three outputs: the cost estimates, the basis of estimates, and the project documents updates. We update the assumption log, we update the lesson learned register, we update the risk register. So I like to talk about some of these. So the cost estimate is a quantitative assessment of the likely cost for resources required to complete the project. So as you can see, we say likely cost. It's not exact. There's nothing exact. You know, it's an estimate. It is a prediction that it is based on the information known at a given point in time. Cost estimates include the identification and consideration of costing alternatives to initiate and complete the project. Cost estimates should be viewed and refined during the course of the project. Why? Because we get more information. Costs are estimated for all resources. This is very important. That will be all resources that will be charged to the project. This includes, but is not limited to, of course, labor, materials, equipment, services, and facilities, as well as special categories such as, you know, inflation allowance, because there could be, say, inflation, say 5 or 4% each year. If the project, you know, take 4 years to be completed, you have to take the inflation into account. Cost of financing, because if you borrow money from agencies or banks, you know, you have to take the cost of financing into account. Or contingency cost. Cost estimates may be presented at the activity level or in the summary form. So the inputs, as we mentioned now, as you can see the input here, I just want to talk about the inputs, the environmental and enterprise environmental factors. I want to talk about the exchange rates and inflation. Yeah, so I just wanted to talk about some of these general notes. And I took this, actually, I copied this from the PM book. 4 notes here. A cost estimate is a quantitative assessment of the likely cost for resources required to complete the activity. It is a prediction that is based on the information known at a given point in time. The second point is the cost estimates are generally expressed in units of some currency like dollars, euros, yen, etc. Although in some instances, other units of measure such as staff hours or staff days are used. The third note here is the cost estimate to be viewed whenever additional information is available during the course of the project. So during the course of the project, we get more information on the project and resource and so on. So we update our cost estimate. The last one is the cost estimates for all resources should be included, direct and indirect cost. Okay, so the inputs and tools, project management plan, the project documents, and the enterprise environmental factors, and the fourth one, organizational process assets. And also we talked about these before, so we may need to go into detail here. The outputs to this process, the tools and techniques, the expert judgment, which is the information in the industry from previous similar projects, and cost estimating methods. And four types of estimating: analogous, parametric estimating, bottom-up estimating, and three-point estimating. And I don't know if, I don't think I have time to talk about these types of estimating techniques, but we can have another presentation, a full presentation on types of estimating techniques. Also, the sixth one is the data analysis. And there are three types used here: the alternative analysis, reserve analysis, cost of quality. The seventh tools and technique is the project management information system. And the last one is decision making. And we use voting here. Project team or the expert, they vote on something. And we take whatever they vote on is the estimate. The outputs actually to this process, the first one is the cost estimates. The second one is the basis of estimates. And the third one, project documents updates. The basis of estimates, I just want to talk about the cost estimates. So the cost estimates, the first output of this process. Cost estimates include quantitative assessment of the probable cost required to complete project work, as well as contingency amounts to account for identified risk and management reserve. So when you estimate the cost, you estimate the cost for the project plus contingency for identified risk which we know, and also there's additional management reserve to cover unplanned work. Cost estimates can be presented in summary form or in detail, and costs are estimated for all resources that apply to the cost estimate. This includes, but not limited to, direct labor, materials, equipment, services, facilities, information technology, and special categories such as cost of financing, including interest charges, inflation allowance, exchange rates, or a cost contingency reserve. Indirect costs, if they are included in the project estimate, can be included at the activity level or at higher levels. And the other ones, basis of estimates, also are the output of this process, and also we update the project documents like the assumption log, lesson learned register, and risk register. The third process here is the determined budget. So we planned the cost management, we determined we estimated the cost, and now we determine the total budget of the project. So the definition here is the process of aggregating the estimated cost of individual activities or work packages to establish an authorized cost baseline. So in the cost, when we estimated the cost, we estimate for each package or each activity. Then we add all these estimates to give us the authorized budget or the authorized cost baseline. And this cost baseline will be used as a basis to monitor the expenditure during the project execution. The key benefit of this process is that it determines the cost baseline against which project performance can be monitored and controlled. This process is performed once or at predefined points in the project. Inputs and tools are and techniques, and the output is depicted in the figure in the next slide. Note, a project budget includes all the funds authorized to execute the project. The cost baseline is the approved version of the time-phased project budget that includes contingency reserves but excludes management reserves. Management reserves is outside the project budget. This is something for the management to use. Okay, and these the inputs of this process. So the inputs are the project management plan, and its three sections of this project management plan, which are the cost management plan, which we did in the first process, and the resource management plan, and the scope baseline. And the project documents the basis of estimates, cost estimates, project schedule, and risk register. The third input is the business documents, the business case, and benefits management plan, which we did, we talked about this before actually. The fourth one is the agreements and contracts. These are used also as input because we should know what contracts we have with, service providers and others. And the fifth one, enterprise environmental factors. And the sixth one is the organizational process assets. The tools and techniques, the expert judgment. The first one is expert judgment. Second is the cost aggregation, addition of cost. The third one is data analysis. Fourth, historical information review. Fifth, funding limit reconciliation. And sixth, financing. And the output is the cost baseline, project funding requirements, project document updates, which are the cost estimates, project schedule, and risk register. So I just wanted to talk about some of the outputs here. Actually, this is important. I just want to have a look at my. The tools and techniques, the cost aggregation. Cost aggregation actually are cost estimates are aggregated by work package in accordance with the work breakdown structure. The work package cost estimates are then aggregated for the higher component levels of the WBS, such as control account, and ultimately for the entire project. The funding limit, what is the funding limit reconciliation? So the expenditure of funds should be reconciled with any funding limits on the commitment of funds for the project. A variance between the funding limits and the planned expenditure will sometimes necessitate the rescheduling of the work to level out the rate of expenditure. If you find any variance, you have to look at your schedule and do something about it. This is accomplished by placing some imposed date constraints for work into the project schedule. The sixth one, the financing. Financing entails acquiring funding for a project. It's common for long-term infrastructure and industrial and public, service projects, the large projects, to seek external sources for funds. And on these external funds, there are some interest. So you have to take this into account. Okay, the outputs, I don't think we need to talk about the output of this process, except the funding, project funding requirements. Project funding requirements are periodic funding requirements, e.g. quarterly, annually, are or annually are derived from the cost baseline. The cost baseline will include projected expenditure plus anticipated liabilities. Okay, the last process in this is the determine. Sorry, we talked about these inputs and tools. The control cost. So we plan the cost management. We estimated the cost. We determine the cost, and then we have to control the cost. The definition of this process is it is the process of monitoring the status of the project to update the project cost and managing changes to the cost baseline. The key benefit of this process is that the cost baseline is maintained throughout the project. We should not go outside this cost baseline. So if there are any variants, we have to do something on these variances. This process is performed throughout the project. The project cost control includes many things. The first one, influencing the factors that create changes to the authorized cost baseline, ensuring that all change requests are acted on in a timely manner. If any change order or change request is left, for it may cost us additional money. Managing the actual changes when and as they occur. If you leave them, you may entail additional cost. Ensuring that cost expenditures do not exceed the authorized funding by period, by WBS component, by activity, and in total for the project. So we have to monitor to see we don't exceed. If we say, in this quarter of the year, we're going to spend so much, we have to see at the end of this quarter of the year to see where we are and control, the budget, and also by the WBS component, and also by activity, because we distribute the cost on each activity. Monitoring cost performance to isolate and understand variances from the approved cost baseline. Monitoring work performance against funds expended. Preventing unapproved changes from being included in the reported cost or resource usage. So any change request which is not approved, you should control and monitor that it is not included in the expenditure. Informing appropriate stakeholders of all approved changes and associated costs. And lastly, bringing expected cost overruns within acceptable limits. The tools and techniques, inputs, tools and techniques and output are depicted in this figure. So the inputs for this process is the project management plan, and it's three parts of the project management plan, which are the cost management plan, performance measurements baseline, and scope baseline. The second input is the project documents, and we use here the lesson learned register. The third one is the project funding requirements, and the fourth one is the work performance data, and the sixth is the organizational process assets. Tools and techniques, and we talked about these, most of them before: expert judgment, data analysis, reserve analysis, to complete performance index, project management information system. The output here, and I like you to note that the control cost process will have so much effect on so many activities. So the output is the work performance information, second, cost forecast, the third, change request, fourth, project management plan update, the fifth, project documents update. And I copied something here from the PM book, the earned value calculation summary table. This is the earned value calculation is very important tool to control, to monitor and control your project expenditure and the schedule. So as you can see here, we have the project, say the plan, we have the abbreviation, we have the name, we have the definition of each one of these items and how it is used and the equation. So all the equations are here, and you can, find in the literature some examples on how to find, say, cost variances or schedule variances or earned value measurement or schedule index and so on. And this is the last section of this presentation. I hope it is useful and hope to see you in the next presentation. Thank you and see you again.